All right, I think we've got everybody. Hey, everybody, welcome to back to the fourth episode of XTalks. You should buckle up because it's going to be a good, deep discussion on the hottest trends, tech, and projects in DeFi for 2024. This week, we've got a pretty good lineup for you to help guide us through the rabbit hole we're about to go down. Joining us is MC Squared and Kuma Protocol. And of course, as always, we have our very own chief that's going to be joining us, guiding us through this mind-blowing twist and turn of discussion. So I can tell you it's definitely going to be a DeFi feast. So if you have comments or questions, be sure to drop them in the comments below, and I'll kind of look out for those and feed them to Chief and to the rest of the speakers that we've invited up. If that's it. Get ready to take some notes, and I'll hand it over to our L1X chief. Chief, you there?
Hey, I'm here. Have you got me?
I got you, loud and clear.
Perfect. Well, Happy New Year to you, mate, and everybody that's listening in today. It's been a heck of a kickoff for the new year, and yeah, let's kick on. All right. So what I might do is just say a big welcome to everybody that is listening, and Kuma Protocol and MC Squared Finance guys, and I'll invite them up just to say hello, and then we'll throw a few questions out there. So first one, Kuma.
Hello, everybody. Happy New Year, first of all. Hope everybody had good holidays, great celebrations. Wishing you all and us all a lot of success for this upcoming year. Super excited to be on this space with you guys. Thank you so much for the invite. And
You're very welcome.
Yeah. So should I kick off with giving like a bit of insight, or are we going to on
well,
what we do, or is that going to be happening later?
Jump across the MC Squared Finance guys and let them say hello.
Sounds good.
I think they're just still connecting through, so let's give them a second to make sure they're on board. All right, still showing us connecting here, so give us a second. Won't be long.
Hey, good morning. Here's Chris from MC Squared Finance.
Hey, Chris, how are you?
Doing great. Happy New Year to everyone.
And Happy New Year to you too, man. All right. Okay, so what we might do is we'll actually just ask each of you to go through your specific projects. Give us a little bit of an overview of what for our listeners who might be new to your particular project, and really tell us also what inspired the creation of this. First, look, we've got MC Squared, so let's start with you guys.
Sure, happy to. Like with my partner, we're since 3 years in the blockchain space and supported several projects. And a year ago, Order Book Layer 1 asked us why DEXs are not mass market ready. What's missing? And we looked into the space and concluded that basically a DEX always tries to stay neutral. They try to tell you, hey, here are the tools. We don't want to tell you anything. We just give you the option to do pretty amazing things. But the issue is people always want to be assured that they do the right thing. Even if they decided to buy now token XYZ, they want to have next to it an information saying, hey, you're doing the right thing. And centralized exchanges love to do that. They tell you every day another great token that you need to have, but decentralized wants to stay neutral. And that's a big issue for the space because it means that naturally people are drawn to centralized exchanges. So we proposed for a year ago, basically, why not make a decentralized marketplace of strategies? And this way you can have opinions from different people, but not having any centralized team which kind of curates it, which kind of defines it, because it's fully decentralized. And the idea was so positive from so many DEXs that we interviewed that in January we said, okay, we need to kick that off. We need to build that up. And since then basically developed it from let's make a marketplace of strategies to let's make it traditional finance, institutional capital compatible, because we believe that's one of the next big um, narratives into the blockchain space, onboarding institutional capital, into that we are now able to create fully regulatory aligned funds in seconds. Because like we figured out how to adapt the spaces, how to adapt vault technology into something that is fully regulatory compliant. And therefore, if you now have a crypto strategy that you like to share, you can work with us, sign up on the platform, and then in some minutes actually create a fully regulatory aligned fund. And that's what we're currently working on. The first thing that we are launching this month is training competitions where you can use the full technology behind, just that nobody can invest in, because we want to like try out and battle test the technology first, and then develop it also into cross-chain infrastructure so that you can have your fund managed on a single chain, but you can onboard users on any other chain. And that's where we want to use the layer 1x technology for, to enable and power our cross-chain future.
Fantastic. Thanks, Chris, for that quick overview there. Over to Kuma with Fady.
Yes. Basically, the Mimo Capital, which is the company that englobes Kuma protocol and the parallel protocol, is basically aims at building protocols that help user navigate different market phases. So one of the things that is common to every single user of Web3, no matter what you do, is that the market cycles can be very rough. And when market cycles shift, you need to have options on what you're going to do with your assets and how you're going to interact with your assets. So in that sense, we built two protocols. The first one is the parallel protocol, which is simply a CDP, a collateral depth position, with multiple layers of technicalities that make it different from other CDPs. And our newest protocol, which is the one that I'm going to be talking about right now, is the Kuma protocol. So the Kuma protocol was born from the vision that back then, when we first started working on this, there was no real world tokenization asset platform, right? So this was very niche. It was still like in the seed phase. And especially when it came to having something that is regulated, there was nothing in the space. So we worked with regulators in Europe, in Liechtenstein, and we obtained, that took some time. That took a couple months. And we managed to get regulated a license to tokenize real world assets in a regulated fashion. So basically, we have two layers to the Kuma protocol. The first layer is the issuance from by Mimo Capital, which is the regulated entity, to tokenize these real world assets. So when I say real world assets, I'm talking mainly debt. So treasury bills, corporate debt, etc. So now this is just the beginning. Obviously, real estate, all sorts of like different tangible assets are all doable. The only issue is, and why we go for debt first, it's way easier to distribute yield based on debt than on an asset that you have to manage. Whereas, treasury bills, be there, U.S. treasury bonds, French treasury bonds, Hong Kong treasury bonds, all these, they generate yield by themselves. They're easy to manage, and the risk is acceptable for most investors. So those are more like hedging options, right? We will have more in the very near future, riskier opportunities, But for now, we're focusing on these, or I mean, riskier opportunity, which yield obviously more yield. But basically, that is the first layer, the regulated tokenized assets. So they're tokenized as NFTs, right? So they're NFTs which are backed by bonds, and these NFTs are regulated, licensed in the European Economic Area. So this is a layer of security that a lot of investors are interested in, and this was one of the reason why a lot of like institutional money was not entering the space, even though there's a lot of opportunities for real world asset on chain, the way you interact with them. Like, for example, if you wanted to take a loan in real life using one of your bonds as a collateral, it would take you business days. And over the weekend, the banks are not working. You would have to call your banker, etc. So there's a lot of issues. So there's a real narrative here for the use case of real world assets, even low yield bearing, because everybody's like, oh yeah, but we're in the Web3 space, we're here for big gains and everything. I'm all about it, but there's also room for hedging always, right? So that's institutional money, they want access to real world assets, and they understand the power of blockchain and the interoperability and all they can do between, like a real world asset tokenization platform and a CDP, for example, which we already have. You could use seamlessly your NFT as a collateral to get a loan backed by it. Or even further, and that is where I'm going to touch on the second layer of our tokenization method, is that the Kuma protocol allows users to swap these NFTs for interest-bearing tokens, so IBTs in short. So these interest-bearing token, they are rebase token. So I don't know, just for those of you who are not familiar with rebase tokens are basically tokens that increase balance seamlessly inside of your wallet. And how they do that is that they track the underlying yield of the asset that is the NFT, which is backed by the bond. So oracles and other infrastructure are used to bring this all together. But ultimately, what happens is that, for example, you purchased a U.S. Treasury bond for $100,000 through us, right? So you've got this NFT. Now, this NFT, you can either keep it and just earn that yield and redeem it at any point in time. There is no lock period. Or what you can do is you can just swap it, right, in the Kuma protocol for IBTs. So all of a sudden, you've got fungible tokens that are just regular IBTs that you can use in different strategies, and that's where MC Squared is a very interesting potential partner, and we are very interested in discussing with companies that do that, because suddenly you can create strategies based on real world yield using tokens rather than just NFTs. So the beauty of it all is that every single IBT is separated in terms of risk from the other. So if you bought US Treasury bond and you swap it, you get USK, which is the IBT that is backed by US Treasury bonds. You do not mix risk. So it's not like a basket of goods. It's not like an ETF. That's a big difference. So basically, all in all, I think I've pretty much touched on the whole process of tokenization and on what we do.
Well, it looks like we just lost Chief. So give me 1 second. I'm trying to find him through this list of people. But thanks for answering that real quick. Give me 1 sec. Sorry, guys.
No worries.
I think it's an amazing progress that we are now able to get real yields onto the blockchain. And I think it's one of the key activities moving forward that we need to diversify the yield possibilities. Like the system needs to interact with traditional finance and needs to seamlessly work together instead of trying to compete.
No, absolutely. It's one of the main pillars of our vision, is that there is room for both, like TradFi and DeFi to work together. They're complementary rather than opposites, right? I think we both agree they can both benefit from each other. A lot of money is in TradFi, a lot of convenience is in DeFi. So let's just bring everything together and find new ways to work around with money.
100%. I was just going to say I agree with you guys 100% on that. Definitely, it's all about working together. That's one thing that L1X promotes a lot about with our blockchain is that we're not here to compete. We're actually here to unite, right? And I feel like being the CXO of Layer 1X and looking at the user ability and user experience across the board, I think that you're going to find in this next bull run that a lot of different projects from DeFi clear down to just the layer ones are all going to start working together, because that's how we're going to get that true adoption to the projects that you guys are doing, to what we're doing. Interoperability is definitely going to be the key, but likewise, it's that collaboration and being able to kind of come together, which is going to make it successful in this next bull run.
I love that you're mentioning the next bull run. It's happening and it's going to keep on happening. It's really good to hear it finally. Yeah, a lot of people have been waiting. It's been dry for some time.
Yeah, exactly. I think we're all due. I think we're all ready, especially all these maxi people that are holding on to their special meme coins and things like that. They're ready for the next bull run, that's for sure. So
Absolutely. And
so
if it doesn't happen, you can always buy a treasury bond, right? And hedge.
yep, you can always
But
buy that. That's for sure. So
for
looks like
for your so
oh,
sorry.
sorry, I was just going to say it looks like Chief is back on. Give me 1 second. I'm just going to grab him really quick and we'll get him back up here.
But I would have a question, like for the NFTs, do you need to, because like as I understand real world assets, you can have kind of two versions. You can have the like I really own the asset, which means you need to do KYC to be compliant with any traditional finance infrastructure, or I only want to have the yield and I don't need the ownership, which basically means there is a voucher issued where you do not need KYC. Do you
Okay, great
provide?
question. Great question. So the whole idea is the way we thought about this and we operate it, and that is the basis of our thought process is that the Mimo Capital, so the NFT itself is regulated and you own it, so it requires a KYC. So basically, you have a claim to the actual bond, and because of this, you have to be KYC. But it also adds a layer of security. Now, if you want access to yield without having to KYC to the same yield, that is where the Kuma protocol comes in place. You can go to DEXs, and swap your USDC for USK, and all of a sudden you're earning. And this is completely permissionless, and this is DeFi compatible, so you can use it in strategies, etc. So these are the two layers. So rather than having one NFT that is like that you own and another that is a voucher, and then you typically have two of the same product that operate the same way, it's just a KYC difference. It's better to have one that requires a KYC, for people who if you're not American, basically. But if you are from a country that cannot purchase, or even if you are from a country that can purchase a bond, but you don't want to spend $100,000 for a bond, which is like the minimum ticket at the moment, we're aiming at lowering it for 10,000. But even still, if let's say you want to use that yield in a permissionless manner, you can swap it for the USK in the case of the US Treasury bills. So yeah, that is basically how it works.
Nice. And
All
then
right.
turning it also into a token, so it's fully liquid all the time.
Absolutely. Fully liquid, obviously, depending on the liquidity available in pools, which is where interoperability becomes, and I think that's the next step that we're going to talk about. There's some, limitations to bridges at the moment, right?
Yeah.
Like a lot of exploits, a lot of, so it's there's arbitrage risk obviously between chains, which is what we're trying to limit, and which is why we're taking our time, in doing this. So just so you know, Rafik is just joined us as a speaker. He's our VP of growth. So he's going to be also chiming in on the conversation. I see he raising his hand, so I think he has something to say about this.
Yeah, if I may just jump in. Hello, everyone. First of all, and Happy New Year. Just maybe to give a bit of a background on the reasons why also, the tokenization process was built in two layers. One reason was that for some institutions, typically they cannot go into the DeFi world, right? Like some regulated banks, for example, can only have an introduction, let's say, to blockchain. I mean, you saw how complicated it is to get a Bitcoin ETF accepted. So it's essentially we built, the first layer, so the regulated NFT, so that they can get their hands and get introduced, on the whole blockchain world without having to essentially go into the DeFi world. Now, I think the cool thing is that if you have a treasury, so let's say a protocol treasury or some VCs that have their funds, let's say in USDT or USDC, you can get your hands on the NFT and either keep it as is, and you get safe yield right on your treasuries, or you could decide to do the liquidity game. So then you can add liquidity, you can LP into the pools in different dexes and get the rewards from these pools as well, on top of doing obviously the arbitrage game. So yeah, again, and I think it has different purposes and it targets different type of users there.
Gents, thanks very much for those updates. Sorry, I actually lost connectivity there for a few minutes, so I'm back again now. But you touched on earlier about interoperability and the danger of using bridges. How do you guys see interoperability will actually play a role in your particular platforms? I'll throw it over to Chris at MC Squared first.
I think in the future it will be essential. Like if whatever onboarding I currently use, if I take a normal person who has a good understanding of the internet, like use social media, is online on accounts, and I tell them, hey, here I have 3 great tokens, or it's so much easier to buy your bond now on the blockchain or whatever. The amount of knowledge they need to onboard on chain is actually crazy. And especially if they have to understand what are different blockchains, what blockchain my asset is actually on, how complex it is to move assets around chain. And I believe that mass adoption of blockchain can only happen when for the user, it is not relevant anymore. And to achieve that, we need to massively invest into simplify and structure cross-chain interoperability and make it as seamless and easy for the user as possible to kind of move their assets around.
I'll add to that, Chris, that making sure that there's no bridges. So we remove that risk and the security dangers of using bridges.
Exactly. And I think that's kind of also why I like your project with Layer 1x so much. How you structure it is directly attacking these issues and trying to solve it from like a first principle order. It's not like let's create a patch and let's make it a little bit simpler. So instead of 25 clicks, you only need 20 clicks. But rather to say, okay, how can we envision a world where it is drastically simpler and straightforward? And that for sure also starts with making it easy for the protocols. And I think that's what's looking really promising.
And really that same question, I'll thank you for that, Chris. I'll throw it across to Fadi or Rafik, whoever wants to answer. But seeing how, can you explain where interoperability will come into play with your particular your DeFi project?
Yeah, sounds good. So first of all, I think you all heard the call to prayer when I was talking the first time. I'm obviously in Dubai, so that's the reason why. And now to answer your question, I mean, definitely interoperability is a big topic for us, and even before working with Mimo and Kuma, I mean, I was always a big fan of interoperability, following back then the development of Polkadot pretty much from the beginning, and then seeing Cosmos, and today I'm very bullish on what you guys at Layer 1X are doing. And I think there are like two simple reasons for that. Is the first one, I think when we compare Web3 to, like the traditional finance world, obviously we're trying to make it easier for everyone to join the Web3 world, so blockchain, and be able to bank the unbanked and so on, and have access to financial assets. That's the first thing. So it has to be easy to use, and we have to be able to connect everyone right on one, let's say, similar kind of layer. And the second one also for us is, if we want to attract traditional finance into blockchain and attract all of these financial assets and products on chain, we need to make sure that liquidity will not be fractionalized. And for them, really, when we talk to banks and to like traditional financial institutions, what we're trying to explain to them is that, hey, at the end of the day, blockchain is just the same as the finance world, but a lot more efficient. Why? Because there is no borders anymore. You can sell to pretty much anyone that just has a phone, an internet connection, or a computer, and essentially it's going to make their financial markets a lot more efficient and a lot more liquid. But for that to be true, we need interoperability. If we keep all of these different blockchains separated, it just doesn't make any sense.
I think you're absolutely right. I think that true decentralization brings that into play as well. So, and throughout the time that you've been building, what sort of challenges have you come across, and especially around things like choosing a chain or a particular network to build on? And really, that does link back to the interoperability. Is that, were you constrained? Did you feel constrained? Fadi first.
Is it, sorry, who goes first? I think
Oh,
if they got
Fadi
it.
or Rafik, whoever.
Okay, perfect.
From
Yes.
Kuma, yeah.
Cool. So I think one of the main constraints and challenge, which is still the case at the moment, is still very valid, is access to liquidity and deciding on which chain to deploy on based on that. I think liquidity has always been and will always be one of the major limitation. As Rafik mentioned, the fractionalization of that liquidity across multiple chain is not something that helps. It's something that we need to get over with, but it's something that we're very careful about using bridges, because all the exploits, all the risk associated with it. So a solution like Layer 1X would really make things bring DeFi to the next level to which it should be, in order for, as Rafik mentioned, institutional money to come in. Because if all these chains are linked, all that liquidity is linked, and then you've got on top of that, because interoperability between chains is one thing, but also interoperability between different protocols. We might want to work with a protocol that is on a chain that we're not deployed on, and that is a bit annoying. That's so they have to deploy on that shit. So that whole thing, that whole fractionalization is something that really limits the way we'd like things to work. But hopefully with solutions like Layer 1X, we're going to get over this hurdle.
Yeah, well, that is our objective, and I think that it adds a lot of complexity and a lot of risk for people who want to transact or to utilize your project to be able to do that. Over to Chris now with that same question about some of the challenges that you faced, and were there any really around the choosing a chain or network?
It's a really tough one currently. What I'm most surprised about is we often get also requests from like newer chains to work with and to look into, and I'm so surprised that often it is still cheaper to buy tokens on a new chain via the credit card than actually bridge it there. it's such a simple thing that actually, if you're all crypto native, it should be so much easier actually to use crypto native tools instead of that you need to rely on traditional finance. And like whenever I get the feeling I need to use my credit card because it's just more efficient, I think there's still something wrong in the system. And that's just the start. Like on the other hand, there is currently no infrastructure where you can actually get the relationship between all tokens on all the different chains. Like there is no like API or web service where I actually can understand where on which chains is USDC and who actually issued it on these chains. So like I think we have a lot of very basic issues still in the cross-chain interoperability space that we need to solve to make it easier and standardized on how to work with it. And then I don't even talk about all the different node providers and API services that whenever you go to a newer chain, you have again another API from another company that works a little bit differently. And therefore, you need to make your own translation layer to actually map it again to your own internal standard, which definitely will be different again to all the other standards out there. So it's still kind of a very decentralized mess, I would say, that quite needs some standardization.
Chris, I think you've hit yet another nail on the head, and I think what we'll do is we'll accept that challenge and see what we can do about providing that single API set for builders like yourselves, so that you can not just do things like on ramp and off ramp, but for new users or people who want to bring funds in, but also to make it so much easier to transact cross chain, and that's absolutely key. Now, can I just ask, Chris, while you're on, have you got any plans in place for future integrations or partnerships within the DeFi ecosystem?
Oh, plenty. Actually, the first one, which will be really nice, is we'll launch trading competitions. So we will be the first service where you can actually prove on-chain alpha, so that as a trader, instead of sharing a picture on Twitter where you say, hey, I made XYZ returns in yesterday. With us, you can have it on-chain verified. And we launched that with competitions, so you can compete with other traders who actually the best performance. And we will launch that together with Cointelegraph still in January. And first starting with spot trading. And then we already have partners for perpetuals that we probably launch in February on another chain, and then go into liquidity provisioning, where we also have then even another chain where we will partner with, probably launching also in February. So our cross-chain challenges will grow pretty fast. And creating a system that is multi-chain and then even cross-chain is a big challenge now.
Right. Well, I think there are probably conversations we'll need to have about which particular chains you're going to need connectivity with. So I don't think that's an issue. And over to Fadian or Rafik around any plans for future integration or partnerships that you may be working on.
Yeah, definitely. I mean, again, for us, we're pretty chain agnostic. So really trying to be on as many chains as possible, obviously while keeping security at the maximum. And just on that note, one thing that often get overseen is that obviously if you deploy on chains that are not coded with the same language, let's say you are in Solidity but then in Rust and so on, it also becomes a lot harder to audit, right? So all of the different languages, and some languages do not have a lot of auditors. So again, like interoperability with something like a layer 1x makes security better and easier to manage for every protocol out there. But in terms of partnerships, we're obviously looking to work with as many chains as possible, or with like interoperability players. Because again, for us, is we just want to make sure that anyone, anywhere can access yield from reward assets, and make sure that they can get some passive income and get safe yield also from reward assets without having to go to their bank, or sometimes they can't, or they don't have enough money, or they're not an accredited investor. Just basically democratizing the access to reward assets. And for that, yeah, we'll be talking to obviously layer one, layer twos, interoperability players, DEXs as well, to create those pools with even more rewards for the users.
No, it's fantastic. Thank you for those updates. And I think there's a common theme there about that I'm hearing coming through, and that which we all really know, but and that's really around ensuring that we do get that true cross-chain and interchain interoperability available, and really being able to do it faster, safer, and cheaper. I think that's absolutely key. So, what we got you on the so do you think what do you think of the current state of the Web3 DeFi market, and where do you really see it heading over the next year or a couple of years? That's over to Fadi or Rafik first. So.
All right. Well, the thing is, I think currently the DeFi market has evolved a lot over the past couple of years in the way these companies first raise the money, how they spend their money, and how people interact with decentralized finance in general. New assets are being added to the basket of possibilities for users, which is a beautiful thing. Which is also what we do with our interest bearing tokens and bringing yield from reward assets to DeFi. Now, the thing is, as I think in the future, where we're going to be headed and how we're going to achieve it is going to depend highly on how can we integrate and how can we attract people and money from traditional markets into the DeFi ecosystem, right? A lot of them are starting to understand the possibilities that it offers, and it's insane, to be honest. I think we all know, if we meddle a bit with DeFi and if we meddle also a bit with TradFi, the sheer amount of time you save and the sheer amount of like friction you abstract when you use DeFi. So DeFi is here to stay, that's for sure. And I think it's got amazing days coming, and with the bull run coming, I think there's going to be like a lot of new players coming, returning, either or both, and they're going to bring like a lot of advancements. Now, something that is really needed again is interoperability, less friction, and transparency in how things operate. We have a lot of partners we'd like to work with, and one of the main issue that we see usually is we can't work with them because there's no way we can. They're on another chain. They can deploy on this chain, or would like to deploy on this chain. But so there's a lot. And as Chris mentioned earlier, it's easier to buy natively a token on a small chain, rather than bridge it, which doesn't make any sense and which hinders us, also Kuma protocol a lot in the way that we want to operate. So smoothing things out in DeFi, bringing new money from TradFi, I think is going to take DeFi to the next level. And I think Rafik wants to add something on top of that.
Yeah, just
Sure, go for it.
Yeah, just very quickly, I think, when we compare today TradFi and DeFi, obviously TradFi is heavily regulated. DeFi is not. What is regulated is the entrance and exit, so on-ramp, off-ramp. And I think, if we hit the bull run later this year, I think it would be great. I think in the DeFi space still has some space to maneuver, basically, without being heavily regulated. But seeing how regulation is coming upon like centralized exchanges and like institutions that play in the Web3 world, in the blockchain world, I think we have maybe another 2 years before regulation comes into place in the DeFi world as well. So I think now is still a good time to pioneer, I guess, and try things out. But probably it will not last very, very long, at least not in my opinion.
Rafik, just a question there you've raised around the regulation. Do you think there's any scope there for self-regulation so that the regulators, when they come to the market and particular projects, they start looking at it going, well, you guys are actually starting to do the right thing. Do you think there's any scope for that?
Yes, definitely. So I think if you are building a project today, I mean, the best thing is to try to look at like the regulation for traditional finance and try to mimic it as much as possible. And second thing is obviously already be talking with the regulator. This is what we do at MIMO, and obviously we have a fully regulated layer. Then there is the Kuma protocol that is governed by the MIMO token holders. So it's a decentralized, it's a DAO basically, but more of a governance by the token holder. And there, obviously, it's a bit of a a gray area, right? But again, like we try to always be in touch with the regulator and try to do the right thing. But as you said, like you have to try to self-regulate so that when comes the day for regulation, they see that you have done the maximum you could to make sure that you are playing within the line and not going cowboy style on finance.
Yeah, really, really interesting. Thank you for that. I appreciate it. Now, Chris, your thoughts?
I think that like being first on regulation, I would actually call it institutional grade compatibility, because like the must is regulatory compliance, but the want is onboarding huge traditional investors, and they require a different set of standards. Like when DeFi was invented, it was by some nerds saying, "Hey, is it possible? Can we actually do that?" And that is great. That's created a lot of interesting ideas with yield that is not traditionally possible, but also it doesn't really make it sustainable. If you look into institutional grade and what institutions want is a good yield with the lowest risk possible. And therefore, we need to be much more transparent with how risk is created and how risk is managed. And they are not caring if the return is like 12% or 18%. They are much more caring if your risk is either 5% or 15% of what you can lose. And there, the systems, most of the systems currently are not ready for yet. And if you, because the question was like, where is DeFi heading? I think the biggest narrative for the next 2 years will be how to make protocols institutional grade compatible. Will they be wrapped in some structure, or will they be rebuilt because of the inherent risk of some of the things? And also to be much more transparent of how to manage risk. And that's kind of one of our key things that we also enable with our strategy and strategy management, that we enable for the first time third-party audits on chain, as well as having risk matrices integrated that you automatically can exit a strategy if the risk is getting too high.
And I think thank you for that. I do appreciate that. I think one of the things that stands out there is that the risk associated with going cross chain and with being able to transact safely is just unacceptable to most institutions at the moment. Do you think that's a fair statement?
Definitely, especially also it's often a lot of very simple things. Like, for example, most of the DeFi pools actually do not do exact accounting. Like when in the like 2 years ago, when everything was growing crazy fast, nobody cared about who paid the fees. And typically, even now in most of the DeFi pools, even the liquidity pools, when you enter late, all of the people who entered before actually pay your transaction fees. And this is something that is like, if everything is growing, nobody cares. But if you want to go for institutional grade accountability, when you have big investment companies, then you actually need to be accountable for where every cent is going. And a lot of the systems now are still not able to do that. And the same kind of when what I talked about earlier, it's important to understand who issued a stablecoin on this chain or on that chain. USDC on different chains is issued by different people. It's backed by different people. And that is a significant change of the risk factors, which a lot of people still don't understand because they just expect, oh yeah, it always will be worth $1. But that's not true.
Yeah, very good. No, thank you. And Chris, I think a lot of what you're speaking about really comes back to those institutional investors. But I've got to say, a lot of that applies across to private investors as well. I actually was at a meeting earlier today with a group, Blockchain Australia, and one of the conversations came up around even doing personal tax returns. One particular lady there was talking about that as a problem where she'd made a transaction which, you know, she probably shouldn't have, and she knows she's going to have to answer that to the tax authorities. You know, I think, you know, they might be a little bit more lenient with an individual, but certainly not with corporations.
Definitely. And like, I mean, you always have these issues also in kind of traditional finance world. And there will be kind of ways around and things that you can do, but it's like transparency and accountability will be a very big topic in the future. Also, between the protocols, you know, like it's not anymore the narrative, can it be done? Because now we know what can be done. We now basically know what projects are working. But it's about can we get the standards to a level that is on par with the standards and quality of traditional finance in terms of institutional grades and accountability. And I think there is a lot of things to do still.
Yeah. And Fabian Rafik, do you have any thoughts around that, around the future of Web3 and the challenges and limitations around that? And it may just be around you know, the risk side, or it could be anything really. Your thoughts?
No, I mean, I think completely agree with MC Squared here. I think I mean, regulation and more security and transparency will be keys to onboard not only institutions but a lot more users. We like it or not, the blockchain world, for a lot of people who are not very familiar with it, is still seen as, you know, a big scam or a very risky world, or, you know, a place where you can invest your money and lose everything within 48 hours. And I mean, again, of course, there are risks in traditional finance as well, but everything happens so quickly in Web3 and blockchain that obviously it makes it very, very scary. So I think we need also on our side, right, from you know, all of us building in the space a lot more accountability, but also putting in place the right tools to add more security, to make sure that, you know, investors feel safe and that there are ways for them to not lose all of their money, or for scams to be so easy to set up. And I think that goes again with working together, having a lot more audits, but also making sure that we have mechanisms to limit, you know, like when there, I don't know, rug pulls is one example, or like when a bridge gets hacked and things like that, or find ways to eliminate completely those kind of threats. But I think for that, yeah, I mean, there will need to be more regulation while keeping decentralization, which is, you know, a challenge. But again, just more transparency and security.
Yeah. But here's a bit of a question. I've worked across through global investment banks and across other areas of industry for many years. And we talk about the scams in crypto, but isn't it fair to say that those things also exist in the traditional finance world, and potentially a lot larger than what crypto is? And do you think crypto is going to give us solutions in that area? Yeah, and not just crypto, but blockchain in general.
Yes. Like, yeah, yes, definitely. I think one of the biggest differences is in Web3, they're running differently. And it's like, I think one of the most important things that we always forgot is that humans are based on habits, like they're driven by habits. And so it's a big question of what do they already know? How do they know how things are working? And how do they know what tools they can use? And that there are governments and that you have courts, and if there's an issue, you can actually sue someone, is a very, very big habit actually of people. So they know if there is a company and the company is registered in the US and I'm a US investor and they do something stupid, then actually I can go after them. And that's why the ETFs are such a big topic, because it enables traditional investors to get exposed to the DeFi world, but still have their traditional tools that if something goes wrong, they can sue someone. And I think that's a lot of things that what we are missing in the Web3 world to have, like, how can we also simulate the same habits, how we can make them comfortable to say, hey, it's what you already know, it works the same way, and this is how we structured it. And on the other hand, we need to be actually better than traditional finance in identifying scammers and prohibiting them.
Yeah.
You know, as long as we say, oh, we don't care if you use $10, if you lose $10, because like it's not important in the big picture, we hurt our own credibility. And I think that the whole ecosystem is still doing far too little to actually compete against scammers.
Yeah, look, I think you're right, and I think we're at LoanX, from our view, we take that security extremely seriously, and we're introducing a whole bunch of new capabilities coming over the next coming months to increase that level of security and just enhance it to a level that I don't think the market's ever seen. And to me, it's really around it is the responsibility of blockchain overall to introduce that. Yeah, let's see where it goes. Rafik or Fadi, your thoughts?
Yeah, I mean, I think I agree. You want to go ahead, Fadi?
No, it's fine. Go ahead. I'll jump right after.
Like, you know, just I mean, I agree completely with MC Squared here, and I think, as you said today in traditional finance, we know exactly where to go to complain or to sue someone or an institution. You know exactly what to do. When it comes down to blockchain, what do? Who do you go speak with to say like, hey, I added this wallet as a Chrome extension and try to bridge this token that maybe they have never heard of from this chain to this chain? I mean, it's just not. Yeah, there is no process, right, to really be able to put a complaint if you get scammed or if you get hacked or anything like that. And I think that's what makes it, I guess, more dangerous in the eyes of non-trained users. For us in the space, sometimes when you get hacked, well, you're like, okay, well, I lost some money. It's part of the game because you're in it, you're building it, so you're aware of the risks. But I guess when it comes down to normal users and people out there, that's not acceptable at all. So we have to get better. Exactly.
Yeah, you're quite right. Yeah. It isn't acceptable. So we as an industry have to actually introduce that security for the users to make it a safe space for them to come.
Yeah, absolutely agree with this. I think another point is how do we achieve this without denaturing DeFi, which is supposed to also be free and permissionless, and it comes with inherent risk, right? It's like you can't really have like the milk, the butter, and the cake, right? You got to choose, and I think the balance is what we're really have to achieve in order for both institutional money to come in without losing the convenience, because the convenience comes at a cost, which is the risk, correct, and vice versa. So how much can we sacrifice on convenience in favor of risk, and vice versa, is going to be the sweet spot that we're going to have to find in the future.
But should we have to sacrifice for that security?
Well, I think there is the way we interact with DeFi, right, which makes it so convenient and so fast, abstract a middleman. And by abstracting the middleman, you remove eventually, forcibly, you remove the person to blame, right? So when you put your money in a bank or whenever you deal with TradFi, you have a broker in the middle. There's somebody that is inherently there doing your trade that you can blame for. Are you going to win or not? You know, we got like thousands or millions of cases every day, but at least there's some leeway, right? In as Rafik and Chris mentioned, you're when you're dealing with DeFi, in most cases you have no one to blame but yourself for a trade where you lost or you won money. So we have to find a sweet spot where there is somebody that is responsible for this. And I think there should be I think we're going to come to a place where it's going to coexist, right? If you want to be a complete DJ and deal with like DJ stuff, you're going to have a chain for this, or you're going to have like a way to do this. And if not, then you're going to have another way of dealing with your money for traditional investors to make them more comfortable, right? So I think space for everybody to coexist, and yeah, finding a sweet spot.
Okay, I'm not sure if it was just me that disconnected then, but thank you for that. How can very much appreciate it, but how can the listeners learn a little bit more about your particular DeFi project? And I'll go over to Kuma, to Fadi and Rafik first. And how can they stay updated on your progress for our listeners?
So I got cut for a minute, so I missed the question. Sorry.
Okay, no, I wasn't sure if it was you or me. How can our listeners today actually find out some more about your particular project and stay updated on its progress?
Great. So I mean, they can obviously follow our Twitter account. So it's at Kuma Protocol, Kuma, and then Protocol, or as well follow the Mimo Labs. So it's MIMO Labs on Twitter. And I guess the easiest way I mean, if you have questions, is to join obviously our Telegram or Discord channels, and you can find the links directly on our or on the different websites. And yeah, feel free then to ask your questions, in regards to the regulated layer, to get your hands on those regulated NFTs backed by RWAs, or where to get your hands on the interest-bearing tokens, so aka stable coins that pay the RWA yield.
Okay, brilliant. And Chris, over to you for how do our listeners learn a little bit more about MC Squared Finance and stay updated?
Sure. You can easily follow just our Twitter, where we update all of the news, or you also have in our Twitter profile the link tree. I would recommend joining the Telegram community, where we have most of the updates and the infos about our upcoming launch. So that's definitely the easiest way. One thing that I wanted to note to the discussion before is, if you have permissionless, but you want to have trust, the thing that solves this conundrum is reputation. So it needs to be transparent for people to understand your on-chain reputation and history. And only when you build the history on-chain, you can then truly become trustworthy instantly. And I think that this human verification protocols are going a little bit into that direction. But it's much more that you show with your true actions on-chain over time that you build up your trustworthiness. And that's one of the big topics that we're also building on.
Absolutely agree with you, Chris.
And that really goes to actually removing that level of risk, that trust level of how you, as a particular project, your particular DeFi project, is actually building out its reputation to enable users to go, well, actually, I know that particular project is trustworthy. They're a good team. There've been, no losses, or there's been no scams on there. So I think that builds up that, you're quite right, the trust level. Yeah.
Absolutely.
Yeah. Now, would you guys, would you like to just give us a little bit of an advice for any developers or other entrepreneurs that are out there at the moment looking to actually build in the Web3 DeFi space, what lessons did you learn really about when you started building that you'd go back and go, I'm not going to do that, I'm going to do something else? And over to Fadi Rafik first.
Yeah, I would say, I mean, first thing first, it's easy to think, okay, I'm just going to build this on my own, right from my office, or from my bedroom on my computer. But I think it's good to go out there to the conferences, to speak to other devs, to speak to other projects that will help you not only like meet people and people that you can potentially work with, but also get your project known, see if it already exists, and also get directly advice on like what the space is about, what is the next hot narrative, or what do we actually need in the space. So first thing is get out there, and second one is try to again just play within the rules and try to look at regulation as well. Like building something without having a look at all at like the legal framework and regulation is not a good idea if you want your project to actually succeed long term, scale, and have something that is stable and safe for the users.
And thank you for that. Appreciate it. And over to Chris, your thoughts on the advice you'd give to other developers and entrepreneurs?
I think going out there is a good start, especially often very tough for the developers. But like, I think one of the Web3 and the blockchain is one of the most open spaces I've ever been with and I ever like worked with. And there is so many great opportunities in collaboration, especially that building verified, bug-free technology in the finance space is super tough. And therefore, I would recommend to build on top of as many existing protocols as you can, of protocols that are verified, that are audited, and try to like think what is the real innovation you want to bring to the space and how you can combine existing infrastructure to just focus on this little small innovation that you actually bring in. Because this, on the one hand, will drastically reduce your risk and also enables you to immediately work with partners who can then also be your first kind of trust partners for the space and for building up your own community.
No, thank you for that, Chris. Very much appreciated. And I think it also shows that in blockchain and in particular in DeFi, that it's very much the community itself, I've noticed, is very much willing to share knowledge and share guidance and advice, which is probably not something that's seen in the traditional finance world at all.
Yeah, that's true. I think you would be surprised of how much people out there are ready to help and ready to give advice and join or advise and for at no cost, literally just to make the space grow. I think it's truly an amazing space to be in and to be an entrepreneur in.
Like even developers, there are several projects and protocols out there. If you build on top of them, if you work with them, they even give you developer resources to solve your challenges and to be a sparing partner with your architecture solutions. And so like go out there and work with others and build something amazing.
Absolutely. I think most of the people who make the space advance in general are those devs that are doing things. I'm not going to say altruistically, but they're doing things out of passion because they believe in the space. They're true believers of the space. Uh, for a lot of them, money is a byproduct, and those are the people who actually make the space go further. And yeah, as you guys said, they are more than willing. We've seen them, being in Dubai. We have a lot of conferences, a big hub. I really urge anybody that is in the Web3 space to come to Dubai, to conferences, etc., because it really is an amazing place to network and find like-minded people.
No, thank you very, very much for that, gentlemen. So look, I think we've probably gone a little bit over time here, but I think it's been a fantastic conversation that we've been having today. And getting two particular DeFi projects on a call excuse me, just really shows that collaboration and the willingness to share information. Fadi, Rafik, and Chris, thank you so much for your time today. It's been really very much appreciated. And let's see where we're going to go over the next few months with your projects. I'm very much looking forward to it.
Thank you.
Deep.
Looking forward to
Thank
it.
you so much.
Thank you. Have a
Thank
great
you.
day.
You too. Bye-bye.
Bye. And Happy New Year again. Bye-bye.
And Happy New Year again.
Happy New Year.
Hey, thanks everybody for tuning in for the 4th episode of XTalks. Please make sure that you mark your calendars or set your Twitter reminders so that you don't miss the 5th episode happening on January 5th at 9 a.m. AWS time or 1 a.m. UTC. We are continuing our topic of interoperability and in DeFi with all the trends, new tech, and upcoming projects. So again, please mark your calendar. We'd love to have you guys listen in as we invite a couple more new projects coming in. So thanks for listening in and have a great one.